As customers look for ways to make cuts to their household budgets,
For everything's so expensive, you know. So
some are switching to buying essentials with buy now, pay later products.
people can buy it like a bulk pack and not actually, shell out their money for it. They can put on a payment plan.
At Zip, we love putting you in control of your money.
Buy now, pay later companies buy a customer's debt in exchange for a merchant fee. Customers make interest-free repayments in instalments, but if they pay late, they get charged. It's now a crowded market with big players muscling in.
Just look for Apple Pay at checkout.
You've seen a land grab where these businesses are spending a lot of money on sales and marketing to acquire new customers. Those customers aren't necessarily good customers.
Afterpay's proportion of debts that customers can't afford to pay back has risen to nearly 14% of outstanding loans. Zipco, Klarna and Affirm are all under 10%, but they're still much higher than arrears on Commonwealth Bank's credit cards.
Some of these businesses will disappear and we'll never see them again. That's a fact. In this environment, there'll be no more funding for them.
These stocks have tumbled. Afterpay's lost 50% since its merger with Block in January. And in a year, Hum, Zipco and Sezzle have all plummeted.
As interest rates rise in response to rising inflation, then of course what happens is your cost goes up. So the margin that you make on your book of loans declines.
In the face of a declining share price, Zipco plans to merge with competitor Sezzle.
Reports of our demise are greatly exaggerated. In March, we did take proactive steps to reduce our global cost footprint, and we'll see the benefits of those in the FY23.
Regulation is also looming for buy now, pay later products. The sector's currently exempt from credit laws because it technically doesn't charge interest on repayments. Instead, some companies have signed up to a voluntary code, but that's about to change.
We'll consult with industry and with consumer groups. We'll look to legislating, whether we do that in one step or two. We will ensure that buy now, pay later is regulated as a form of credit.
They don't need the same sort of regulation as might govern a mortgage. And of course, we've seen that regulation of the banking sector does not necessarily deliver better outcomes.
Consumer advocates disagree.
There are so many people who are coming to us who have gotten in over their heads, and they've often gotten in very, very quickly. So whatever checks they are doing, it is not the same as doing a proper responsible lending check as is required under the credit law.
In terms of next week, so Doug's got...
The boss of smaller player, Fupay, says regulation needs to be tougher than adopting the industry's voluntary code.
You've got to be regulated, but not have open-ended credit, staying away from that debt trap, or we think the bad credit model of credit cards.
Carving out new laws to benefit retailers and consumers.